Before we get to the interview with Michael from Domain Magnate, I need to let you know that the audio isn't fantastic. So I didn't realize that when I scheduled the interview with Michael, it's a little noisy where he's at. In fact, there's some background noise, a couple birds chirping. It was actually a little bit pleasant. Maybe a dog barking here and there, no big deal. But unfortunately, there was some, I would say, light to heavy construction going on very close to him or directly over his head. I'm not sure, but at some point you'll hear some hammering and such. Stick with me. I hope it isn't too bad. You can yell at me in the comments. I welcome it. You could tell me I need to redo it or whatever. I wasn't sure if I was even going to publish this because the audio did come out a little bit bad. So I do apologize for it. If it turns out to be unbearable, feel free to dislike the video and yell at me in the comments, and then I won't do it again. So I do apologize. And without further ado, let's get to the interview with Michael. Hey, what's going on? Welcome to the Doug Show. My name's Doug Cunnington, and in this episode, I talked to Michael. And now that I'm about to say his last name, I realized I didn't confirm how to say it. So I'll let him get to that. And we're going to talk about 3 things to do before you sell your site to maximize the value. And we'll get into structuring deals, both as a buyer and a seller as well. So Michael, welcome. And how do you say your last name?
Hi, Doug. It's Michael Bereslavsky, and glad to be here.
It's awesome to meet you. I've seen that we run sort of in the same circles, so it's pretty cool to finally chat with you. For the people that don't know you, can you give a quick intro about who you are and what you do?
Sure. So I've been involved in buying, selling, managing, growing websites and online businesses for the past 16 years. I started with just $1. I remember when I started, I bought a domain, a cheap domain, a .info that you could buy for $1 at the time, and built my first website. Made some money, then started buying some smaller websites for just a few $100s. And now, a few hundred deals later, so we are mostly buying sites in 6 figures. So like right now, this month, we are doing a $600,000 deal. And we have been quite active buying some new sites every month or every other month.
Got it. And you said 16 years, right?
Yep.
Okay. So you've seen so many changes over the last several years. And I'm curious, how did you initially learn about websites and earning money online? Like, was there a specific blogger or someone who inspired you, and how did you get into it in general?
Yeah, good question. It's interesting because things have changed drastically. Back in 2005, there was just no concept of making money online. When I told all my friends, my family, everyone, they just looked at me, okay, but go get a job though. So it's nice you have a blog. And there was no way to really learn. There were no courses, nothing. There was a blog that was popular at the time, shoemoney.com, by Jeremy, I don't remember how to pronounce his last name, Shoemaker. And that was one of the few ones that was sharing some information. There was the Digital Point forum that was quite popular. And then somehow I got involved in a few private circles with some other people who were building websites and were successful at the time. So that really allowed me to learn, and also experimenting a lot myself. I was doing dozens of different things. I had all kinds of ideas, and then I would go and implement and build it, and then just experimenting a lot, and later checking to see what actually brought profits or not.
Okay. And because you've been doing this for so long, and there have been so many changes, do you have any big failure stories that you can share where things just didn't turn out like you expected?
Yeah, absolutely. I bought a site for $10,000 a few years ago, and I lost about $10,000 on it. That's been a few of those. And certainly, the bigger deals. So what I've noticed is the smaller deals, when I pay less attention, do less due diligence, there is a sort of higher risk. But with the bigger deals, if there is more attention, more due diligence, it's much rarer to miss something important.
Got it. And for that deal that didn't turn out, where you basically lost everything, was there a specific thing that went wrong or that you missed in the due diligence?
Yeah, so the site was earning about $1,000 per month. And I was using very aggressive SEO methods. So as I recall, basically after selling the site, the seller simply removed all the backlinks and put them to a new website that he had in the same niche. And most of the backlinks he acquired were short term, so everything just dropped very quickly in just a couple of weeks. So I probably made like a few $100 there, maybe $500, but not much more.
Gotcha. What year was that?
That was maybe like 4 or 5 years ago, actually. And at some point, at the time, I did a lot of different deals, most bigger ones. So I didn't have much time to really look at this one. So once I kind of got back to that project, I realized that it's just too late. The revenue was practically insignificant. So I just let the site sit there as a reminder to pay more attention and due diligence.
Gotcha. And that could be a whole other episode that we get into. But for today, we will talk about things you could do before you sell a site. And I know several people in my audience, they're sort of staging their sites, sort of like, real estate and homes and stuff like that. So they are trying to figure out what to do. We're rolling into the retail season as we're recording this. So people are thinking, hey, I want to have a great retail season, and then I want to try and put this site on the market. So let's get into the 3 things that people can do to maximize their selling price.
Sounds good. Just before that, since we've mentioned one failure, I want to mention one quick success also. So one website we sold last year for $340,000 that we acquired about a year and a half before that for around $200,000. And so with the revenues during that period also, we probably earned about $250,000 in profit. So it was a pretty good deal.
Awesome. Yeah, that is fair. I'm sorry that I tried to paint you with a brush, but I was going to say, like, because your reputation precedes you, I was like, you're obviously well accomplished. But yes, I'm sorry that I discounted that, and thank you for mentioning it. Okay, go ahead.
Right. So when it comes to selling a website, it's important to understand how buyers perceive it, because if you are a first-time seller, there is a very good chance that the way you look at selling a website is quite different from how a buyer would look at it. You might look at content and think about how much you spent on it and try to value it based on that, while the buyer would look at the perspective, would look at what's the profit, and would look at how much they can grow it. So getting into the mindset of the buyer is really essential to get a good deal, to get a good price. And for most websites, and we are talking about, I would imagine, like 5-6-figure deals, maybe a little bit more, a little bit less, and mostly content sites or SaaS businesses or e-commerce. So in that space, most of the buyers would be in that price range, an individual buyer or potentially a small group, a small fund. So what they would be looking for, of course, is profits and revenues, and they would be looking for financials to see that the revenue, the traffic is stable or going up slowly, so it's not kind of going down. They would want to see that you don't have any major risks, like you're not breaking the terms of service of one of the monetization programs. And they would want to see that there is potential to grow further. They would also want to see that there is some diversification. So now with that in mind, preparing a site for sale is simply making sure that it looks really good in the buyer's eyes. So first of all, it's important to have very clear financials. So make sure that you have your revenues, your expenses very clearly outlined in a spreadsheet, and that you can provide details and proofs for basically all numbers. And then next, also see that you have reduced your costs as much as you can, and also that you've optimized your monetization. So, for example, if you're using Google AdSense for monetization, you might try some other networks like Zoic or Mediavine that pay a bit better. That would be the third step. The second step would be looking at processes. If it's a simple content website, it's not very complex, but if you have many different pieces, it's important to document things to make sure that you have all your documentation clear. And you might also want to include some contacts, contractors, agencies you work with for backlinks, for content, for all kinds of things like that, because a buyer would always value the business higher if you help them, So when we sell a business at Domain Magnet, we always provide free transfer service. We provide them the contacts of people that we work with. We make sure that we make it very easy. And finally, think about what is the best way to sell it. So you can review different marketplaces, different brokers, or even talk to some people who might be direct buyers. The third step, I would say, is talking to some people that you already know who might be interested in buying it once you have everything ready. And then look at some brokers or marketplaces to list it at. And present it in a good light. So make sure that you include all the screenshots, you include all the videos to document all your revenues, that you have a clear P&L, and that you also can explain what is the potential, how the business can grow further, to paint a really positive picture for the potential buyer.
Okay. And well, you covered a lot there. A lot of it sounds like just being organized and providing as much information in an easy to digest format as possible. So I know I haven't purchased or sold a large number of sites, but I know when I have gone to marketplaces or browsed around, sometimes you see a site and there's just maybe one screenshot, maybe it's a little bit out of date, and you kind of wonder like what's going on with it. So with the flood of sort of information, I guess it makes, like you said, the potential buyer feel a little bit more secure because there's so much documentation that basically like builds on top of each other to add like layers of trust overall.
Yeah, absolutely. And that you hit a very good point, and that's what it's all about, creating more trust. So especially if you are a new seller and you don't have an established reputation, so what you want to do is make sure that people look at the business and they feel they can trust you, they feel comfortable with the details you've provided. And it also might depend, of course, on who you sell to. If you sell to an experienced buyer, someone like us, for example, that might not matter as much. But if you sell to a less experienced buyer, they would definitely want to see more documentation. Yeah, I'd say the majority of buyers, they prioritize things very differently from how we do. But you should generally try to sell to less experienced buyers, frankly, because the more experienced buyers would be looking for a very good deal, so it would be hard to get a good price. So I would suggest also, selling to a wider range of buyers.
And for some context, what does Domain Magnet do?
Sure. So we organize funds. We currently run 2 different funds, and we have a third fund that we are raising currently. And then we acquire businesses. So we acquire mostly private deals, and we maintain our private deal flow. We often have people coming to us who want to sell a business. We also have many investors who come to us and want to acquire a business or invest in a business. So we have these options. We have the different funds that we manage that they can join. We have group buys that we set up occasionally that are for bigger businesses, like around $1 million, sometimes more or less in value. And then the investors can join those deals as passive investors. And we also have the option of buying and managing a business for investor, where we find a deal that fits them, acquire it, and then continue managing and growing it. And currently we focus on content and SaaS businesses, and also starting to acquire dropshipping businesses as well now. With our primarily focus on price ranges from like low mid six figures to low seven figures.
Got it. Okay. So there were a few things in there, and I know it sounds like sometimes investors come to you and then you're able to direct them in the right spot. Do you have any sort of like broker function where people like can sell their site through you?
No, so we don't broker businesses. We only sometimes act as a buyer broker, so we represent only buyers. We do not represent sellers.
Got it. Okay.
To avoid any conflict of interest.
Okay, that makes sense. Gotcha. And
if people come to us, sometimes we have people who want to sell a site quickly. They don't want to go through a long process, and they just fill a form, domainmagnate.com/sell, and then we can just quickly look at it and see if it fits our preliminary criteria. And if it does, often we can give them an immediate offer, a very quick offer for a quick deal.
Okay, got it. And if someone, like you said, you want to sort of paint your site as an attractive piece of property that, you know, potentially could go up in value. And I know I've had this happen, and I know, you know, there's ups and downs with Google and traffic, and just in general, things could be in flux. So if someone has a site that's either sort of flat and plateauing, which maybe isn't the worst thing in the world, or their site is actually dropping a little bit in traffic, do you have any recommendations how they can, you know, maximize their profit when they sell it, or at least, you know, minimize the sort of downside of it all?
Yeah, good question. So the sites that are dropping, they are the hardest to sell. I'd say it's really quite difficult. So the best option is to try to reverse that trend, to stabilize it. If you can't, then just try to sell it as fast as possible. But you would have to be ready for a low multiple potentially. Sites with stable, they are good. So it's actually relatively easy to sell sites that are stable, because there are many buyers who are looking for stability. And the best way to position is just by showing what are some potential options there the buyer can expand the site further. And maybe also explain why you haven't. And if sites that are growing, they don't really need a lot of promotion. They sell by themselves. So the best time to sell the site really is when it's growing.
It's so tough to do, because you feel like, oh, it's going to keep going forever, right?
Yeah, exactly. And that's honestly one of our biggest challenges at Domain Magnate, because we manage many sites and we buy and sell, so we make the most profit when we sell. And we always have to find the right time to sell, which is it's like before we hit the peak, before we hit the maximum, but at the same time we don't want to take too much risk, because sites can drop with So I would say it's better to sell before than after, because if you sell after it got hit by an update, or after there was a challenge, then you can lose a lot. While if you sell before, let's say you sell like the peak is here and you sell here, like that's fine. You'll get a little bit less money, but you'll get a good multiple. But if you sell here after it dropped, then it's going to be much harder to sell. So you'll get a very low multiple. So it's a huge difference.
It's so hard. It's such a psychological game. I was going to say, as you were mentioning it, I remembered that's happened to me like multiple times in selling. It's just, you wait too long. You need to sell it before you think it's the right time. So maybe I just got bad luck, but
we do. So the way we do it in our team is we generally have a plan. So we have an annual plan and we have quarterly planning for each site we own. And we review during every quarter, we review our sales timeline. So based on what we are doing, what we are implementing, based on what improvements we are seeing. So at some point, once we feel that we've completed all the things we wanted to complete in terms of adding all the content, like adding enough backlinks, let's say improving your rankings enough, or improving the template, the features, if it's a SaaS business, and then making sure that we have at least like 3 months of stable, good revenue. And that's usually a good time to sell.
Got it. So 3 months stable revenue. Okay. After the improvements. Perfect. As an investor, buying sites for your various funds, you are trying to get like the best deals. So as we mentioned before, as if a site's sort of like declining a little bit, it's really hard to get a good multiple. So are those good values? Are you able to pick up great deals because sites are sort of dropping?
Yeah, that's an interesting point as well. We usually don't buy dropping sites because it's really hard to reverse the trend. So we only buy them when we are pretty sure that we know how to fix it. Let's say that there are some obvious reasons why it's dropping, and then we might buy it. But generally, we just wouldn't buy it. Like we would mostly we target sites that are very well established, that are more like stable, like what you showed. The sites have just been very stable and flat. So that's the ones we prefer, and that have a really long history, like 5-10 years.
Got it. Okay, before we move on to structuring deals and what people might see out there, is there anything else around maximizing the profits before selling?
Yeah, so a lot depends on your timeline. If you want to sell in the next, 1-3 months, there are not as many things that you would do. You would just get your finances in order. You would maximize your revenue, reduce expenses, and prepare some processes and some descriptions. But if you have a year before you want to sell, and especially for bigger businesses, that's generally advisable between 6 months to 12 months, then there is a lot more that you can do. So when you consider selling, really ask yourself, what is the timeline? And from that, you can pinpoint what are the actions to take.
Got it. Perfect. Okay, well, let's move on to structuring deals. And I think, depending on, where someone sells their site, they may have a lot more structure in place. So I imagine if you work with a broker, they may be able to advise you certain things to do with a deal. But I'm just going to sort of ask you in general, what sort of offers might people see if they put their site up for sale, and what things should they look out for?
Yeah, very good. So nowadays there is this trend of people trying to buy sites with almost no money down or very little money down, which to me is quite strange, but sometimes we are successful because there are many people that want to have someone else run their business, run their site, and they just tired of it. So sometimes it works. I would not recommend it. So I would recommend, if you sell a site or if you partner with someone who wants to come in and manage your site, that make sure that they put in a substantial amount of money. I think that's very important. So that's only kind of the only thing to be concerned about. And yeah, in general, in partnerships, it's important to see that the incentives are aligned.
Got it.
Sorry, I sidetracked from your question.
No, that's all right. And we'll just go over some of the basics. So let's say someone is selling sort of directly to a buyer. So maybe they've gone to a Facebook group, or maybe they have a friend who has a friend who wants to buy a site. So just in general, I'll actually let you talk about some deal structure aspects of it, but I will say, you probably want to use an escrow situation so that both parties are protected and have some, security. So you don't, turn over the keys to your site and then the person, runs away, you don't get your money or anything like that. So, let's say it's a site between, they're trying to sell between maybe like 75,000 to 150,000, something like that. So pretty expensive, but not like, some of the
Okay.
biggest sites we see out there.
Yeah, very good. So for really small deals, what we would usually do is, let's say it's $5,000 deal. We would just, and before that, the biggest challenge with deals is not what people might think, but the biggest challenge is miscommunication. So then deals are done verbally. Often people discuss things, and then one person has one thing in mind and the other person has another thing in mind. So that's why the most important step is putting things on paper. It doesn't have to be actually paper. It can be an email or an agreement, but it's important to put things in writing. So if it's a very small deal, it's enough to just send an email with the exact description of the deal. I pay you this amount, you send me this site, these are the assets included, this is the after sales support, like this is what happens with all the different assets, like let's say links, and if there is some kind of non-compete or NDA, things like that. So just an email is fine. If it's a bit bigger, then I would recommend doing an agreement, and it's easy to find template for asset purchase agreement. And then you can just use that template and fill it out and add the details. It's very important to include all the assets that are included in the sale. It could be different accounts, different access. Otherwise, what might happen is you think the seller is going to transfer you like this affiliate account and this social account, but the seller does not expect to do that. So it's important to agree on that. Now going to a bit higher range, like what you mentioned, 75 to 150,000. What I would generally suggest is if you are doing it directly, certainly have an agreement. You don't need a lawyer for that price range. Just get a template and then fill that template with the details. So add the website, of course, all the domains included, all the social accounts, some after sales support, some NDA, not compete, and some other things. Like you want to make sure that the seller, let's say, doesn't remove backlinks that they purchased, or that they would transfer you the contacts for writers if it's a content site, things like that. So put it all in writing, because if it's in writing, it's very clear. So there is not going to be any misunderstanding later. After you have the agreement, and you can also have a different structure. Let's say the price is 100,000, but you are paying 70,000 and then 30,000 in earnout over 12 months or something like that. So the contract will also describe how the transaction is handled, whether it's going to be through escrow.com, whether it's going to be just wire transfer or things like that. What I would usually advise is escrow.com. But for escrow also have an option to do milestone transactions. So if you have a part that is conditional, for example, we often do deals with a conditional. Say for a $100,000 deal, you get $70,000 after a 7-day inspection, after a transfer of all assets and 7-day inspection in escrow, and then the remaining 30,000 could be split over 6 months. Condition upon the site earning this minimum amount or so on. And then in escrow, you can ensure that the condition and the details are added to the milestone. And then it's very clear. And then you just check it every 30 days or so to release it or not.
Okay.
And that's it.
Nice. And there's no like set way to structure the payments, right? It's just a thing to negotiate.
Yeah, it's just open negotiation. There are some standard practices. Like for smaller deals, typically it would just be all cash. For bigger deals, it's very rare to see all cash. For like deals in the millions, it's rare that it would be all cash. So there are standard practices, and there are like some standard variations from those standard practices. I would say for sites in that range, what standard is to have the majority of the amount in cash, like 50 to maybe 80% in cash. And then the rest could be either earnout or just payments, like equal monthly payments over like 6 or 12 months. Yeah.
Got it. That makes a lot of sense. And one thing that you mentioned, I didn't know this trend was popping up. So, and I just want to make sure I got it right. So buyers are saying, hey, we don't want to put any money down. We're just going to like have an earnout situation. Is that right?
Yeah, and there is a couple of ways that buyers do it. So there are some that that don't take equity, that take profit share, and then they come to you and say, we are going to manage the site for you, but we will take the profit later, but we don't put any money in. So that's one way, right? And that's more like an agency partnership. But what I mentioned is people often buy without any money, and that more concerns about more complex businesses, so not so much relevant for content sites because it's very easy to manage. But if you have an e-commerce business, a SaaS business, it's really complex to operate. Sometimes even some content sites as well, if you have many moving pieces, like you have different digital products you sell, like videos to update and so on. So if someone hasn't been managing the site properly, let's say you are not managing the site very well, you don't have much time for it, and then somebody comes to you and that someone has really good experience managing, selling this site, and they have good expertise, they have good reputation, you trust them, and they offer to take over your site and then grow it and then resell it, but they want, let's say, 25% equity for that. So that's something that happens from time to time, yeah.
Got it. Okay. So it's, in a lot of ways, it's more like a partnership.
Yeah, and it's more common in bigger deals when we are talking about deals in the millions and tens of millions. So it's more common that people would come in with not much capital and they would use seller financing, they would use loans, they would use some equity partners, yeah.
Okay, cool. That makes a lot more sense. I was just thinking, the sellers kind of have a lot of leverage, especially in the content site space that I'm in most of the time. Like it's, the values are going higher and higher, and there's a lot more money and people want to invest in it. So, okay, that makes sense. Now, I'm curious about the support that's offered. Typically, are there any sort of like benchmarks for post sale support?
Yeah, I would say as a seller, just try to offer the best support you can. I think it's very important. That's what we always try to do. Often we follow up with buyers who bought a site from us like a few months later, 6 months later, if we see that the site is not doing very well and we want to give them some suggestions. Because first of all, I mean, as a seller, I want to see the site succeed even after I sold it, but also because that often brings repeat buyers. So try to offer the best support you can. As a buyer, you might want to include that in the agreement, that there is some kind of support, and you can also specify, let's say it's 5 hours per month that you would have Skype calls with the seller, or it could be that you would send some emails if there are some questions. So support can be very important, especially because often there are some accounts that you don't have access to, some two-factor authentication, some things like that that you might need from the seller later.
Got it. Okay. And you just want, basically, you don't want to sell something and then, the car breaks down as soon as they pull out of the parking lot or anything like that. And from the experience that I've had with the few deals, like you said, I've offered a lot of support just to make sure like the transition was very good. You mentioned you handle the transitions there. So everything runs smoothly. And, I, from a technical standpoint, I knew how to do it. And then I offered up like a great deal of support, and the buyer didn't even use all of it. It was a, healthy portion of it, but they knew that they wouldn't get stuck. They wouldn't get stuck without any help. So I think that's really important, especially when you're trying to, again, maximize the selling price, and like you could offer up excellent support so that you build up that trust. Very good.
Yeah.
Anything else around the deal structure that we need to think about?
One thing I want to mention also is that I think the prices are, I think content sites are really overpriced. If you look at current markets, there is a lot of sites with a relatively low quality with relatively low, little amount of history. and then you see them selling on Empire Flippers for 50x and so on. And I've seen a lot of deals like that, and the vast majority of people who buy them usually lose money. So I would say that right now it's clear that the market is somewhat overpriced. It doesn't mean that it's going to crash. It might continue going up. No one really knows. But yeah, I would say that buying a content site on the market now is not the best idea unless you get like a good deal or unless you really know what you're doing. So that's why we are also moving more towards SaaS businesses and drop shipping and other models. And with content sites, we've become pickier and pickier. So like 10 years ago, I was literally buying pretty much any website I could find because there were just not that many deals around. And now we are extremely selective. So we might look at tens or even hundreds of sites before we buy one.
Interesting. Yeah, and the trend, I mean, I remember a few years ago where we were saying, it seems like it's a little overpriced, and just like the stock market here in the US and then real estate, like it's continued to, there's been some dips, but it's like continued to climb higher and higher. It's sort of mirroring the stock market in a few ways, although I don't follow super close, but I suppose that's part of it, right? So people are like, well, it seems like the stock market's overpriced. Maybe I can invest in this other asset over here. So they turn to digital assets and websites, and content websites seem to be, like you said, easy to run. So maybe there's just a lot more money in the market. So what do you think?
Yeah, it's just a supply and demand. So because there are so many people coming into this market now and they want to invest in an online business, content businesses are the easiest to understand, to manage. So that's what attracts most people. And generally, they don't really have any experience. They don't understand the risks. They look at it from a perspective of real estate. In real estate, you can't really lose everything. It's extremely difficult, right? You buy an apartment, maybe you'll lose a little bit of value, but you cannot lose everything. But with websites, it's very easy. It's not uncommon. So I think there is just a misconception about the risks. And people like us understand the risks, but most buyers don't have enough experience yet to really understand the risks. I think this is something that's probably going to change in the next few years. And now already there are more and more sort of educational materials appearing around that. So I think the market will become more mature and the prices would shift. The biggest trend that I'm seeing, the biggest kind of market inefficiency is that you often see sites that are really high risk priced very similarly to sites that are very stable. And that's so surprising, like Empire Flippers, for example, and other marketplaces. You could see sites that are pretty high risk with PBNs, like a year or just less than 2 years of history, and their price for like 40 or 50x. And then sites that have been around for a decade, very stable, priced for like 50, 55x. So I think what we'll probably see and what is more reasonable is to have a much wider gap based on that risk profile.
Gotcha. Very cool. Well, any other thoughts about any of the things we talked about before we start wrapping up?
Yeah, in terms of buyers, my recommendation would be to look for deals where you can add value. So look for sites where you can add value. Maybe you can improve monetization. Maybe you see right away some aspects you can improve. You see how you can grow it. So I would not recommend buying sites just to hold on to them. So focus on this kind of growth mindset with acquisitions.
Very good. All right, Michael, where can people find you?
Yeah, so we have our podcast called The Domain Magnate Show, which is on YouTube, on iTunes, and everywhere else you get podcasts, where we have weekly, bi-weekly episodes where we talk about buying, selling businesses, For example, one of the recent episodes, we have a person who just acquired a SaaS business for 2.4 million, and he describes how he did it, how he found it, how he funded it. It's very interesting. We also have a weekly newsletter at domainmagnate.com/newsletter, where we compile the latest and most interesting news in the online business buying, selling space. So check it out. And you're welcome to contact me directly. I'm on Facebook, or email michael@domainmagnate.com.
Very cool. And we'll link up everything in the show notes so people can get to it easily. Thanks a lot, Michael. We'll talk to you soon.